Hello, everyone. Happy Sunday. How is everyone doing? Good afternoon, Patrick. Good afternoon, Martinez. Good afternoon, Richard. And people hiding in the background, thank you for being here. Little housekeeping stuff. This will be, for the time being, the last Sunday live stream. We'll cover some more on Friday afternoons. This will be the last Sunday live stream. There'll be more announcements coming this week. So stay tuned. Also, I am going to be turning off the memberships at the end of the week. Things will just go back to a pure donation model. So there'll be no subscriptions. So just wanted to let everybody know. So thank you for all the members. Everything will be going back to subscriptions. So again, completely optional. Let's just get straight to it. What's coming this week? We have the Dallas Fed Manufacturing Index tomorrow. Nothing really pre-market before the U.S. session. Dallas Fed is forecast to be -10. Prior was -13.5. And we have Fed Jefferson speaking after the market close tomorrow. So nothing really before the open. So everything will be dependent on the European session. And that's where we sit. Tuesday, everything's building to Friday, by the way. We have before the market, we have retail inventories. We also have Red Book. We have home prices month over month and year over year. We have then after the open consumer confidence. I can't talk today. And then we have 2 days of bar testimony. So remember that. Also, we have Richmond Fed manufacturing and services, and Dallas services. This is the week of a bunch of regional Fed indices. So Tuesday really kicks that off. You got Dallas Fed on Monday, but Monday, Tuesday, and then we'll have to see what else is coming. Wednesday, we got mortgage stuff as always. Then we have pending home sales 30 minutes after the open. Bars testimony continues. EIA numbers, but Wednesday's a really light day. Thursday, again, jobless claims Thursday. We have GDP, the final number backwards looking for Q4. This is the backwards looking number for Q4. Keep that in mind. All right, forecast to come in at 3.9%. All right, so that's where that sits. So we have the minor PCE numbers. But then we got Barkin speaking and Waller speaking at 11:45. And then big on Friday, Fed favorite inflation number, PCE, and more important, core PCE. Course PCE, this is 1 hour before the open, so everything's going to be building into Friday. Forecast of 0.6, that's in line. That's the core month over month in line with previous. And the PCE price index is looking to come in a bit, 0.5 versus 0.6. We also have Chicago PMI, 15 after the open. We have the consumer settlement final numbers for March, which is still forecast to be in a contraction from previous. And then you have the inflation subset of those. And then wrapping up the day, we have a couple more Fed speaks. So, all right. Don't worry, Martinez. I just can't do some Sundays anymore. I'm dealing with some health things that are going on. So we're just going to make it. By the way, anybody who joined late, I am at the end of this week canceling memberships to the site. Everything will go back to a donation model only. So that's how it will be done moving forward after the end of this month. And there'll be no more Sunday live streams. We'll cover some more Sunday stuff on Friday afternoons. And we'll see what other changes are coming up to the channel. Hello, Christoph. Good evening, Anissa. Happy Sunday, Options 22. Good evening, Charles. Howdy, Ted. Happy Sunday, Daniel. Hey, George. All right. And, of course, we have Tom with stocks only go up. Oh, pretty green day from your mega caps, your healthcare, your real estate, utilities, consumer defensive stuff. So it was sort of a mega cap and risk off rally on Friday. You can see that utilities, real estate, defensive, and healthcare are leading it. Over the week, though, it was all communication services and technology. Really, but this is interesting. Rotations somewhat coming back to consumer defensive. Fed watch. Remember, now we are back to 37 days away, but favoring the pause, only a 12% odds at this point for the 25 basis point hike. That will change. We'll see a major change in that based off of Friday. So we're really going to follow it tracking into Friday. We're still in fear mode. Current market valuation, we are still at the upper end of fairly valued. So nothing's a bargain right now. Also keep that in mind. In terms of earnings, tomorrow you got Carnival Cruise Lines, but that's about it. Earnings are really winding down. You know, we're starting to prep for the next earnings season for Q1. So these are the stragglers and more minor things. After the close on Monday, nothing. Tuesday, oh, you got Walgreens, but none of this is really going to be market moving. Some of the big names can be market moving. This, Walgreens is not going to make or break the market. McCormick Spices, not going to make or break the market. After the close, a big one is Lululemon. So pay attention to that. And we got Micron. So we got a couple bigger ones after the close on Tuesday, something to pay attention to, especially if you're in the stock. Now, if you're in one of these stocks, you should know when the earnings are and know how you're positioning yourself going into earnings. Interesting would be Dave & Buster's just from an entertainment consumer point of view. That's something I will look at. Wednesday, again, very minor stuff. Cintas, very minor Wednesday. After close, I will check in on the high-end hardware, restoration hardware, on how the high-end retail is doing. Again, not market moving, but very interesting to give us insights into some things and whether it's staying strong, whether the high-end consumer is starting to pull back. Thursday, nothing. Nothing pre-market. After the close, really nothing. Remember when BlackBerry so many years ago was a thing, and now it's just relegated to the dustbin of companies. And Friday, blah. So, but Friday, remember, everything's going to be PCEs. So we got that out of the way. Where do we sit? Thank you, Daniel. That's very appreciated. Don't feel bad. Don't feel bad. I can play with rectangles like the best of them. All right. So where do we sit now? Where do we sit going into this week? We have daily cycles rotating down. Nice bounce back pattern on a Friday. Guess what I'm watching? I bet everybody knows. I bet everybody knows. Watching Friday's high. We start running above there. Then my major will be 40.38.75 if we break above Friday's high. And that's closing in. You see I have the retracements from the highs on Thursday the 2nd to the lows on Monday, March 23rd. We have between the 50 and the 62.5 where we rotated down on Wednesday. But if we do break above those highs, besides looking, remember this 40.38 is just below the 40.42, 50.5. So that's the first area I will be keying on. If we go through there, then I will be focusing on Wednesday's highs and then the 62.5 above there. The 62.5, 40.92. All right. So the 40.92 this week is going to be key on a closing basis, on a daily closing basis. Why? We close above there. I'm watching for higher. Remember, I'm watching for an A, B. We don't know if this is a B bottom yet. We don't know. We still have cycles rolling over. I'm just telling you what I'm preparing for. If we pull back down, though, the key support, because we can still pull back down with cycles rolling over, is going to be about 39.70 area. Below 39.70, we've had a lot of buying pressure between about 39.50 to 39.40. So I'll use shorter term harmonics to fine tune that area. We break below Friday's low. Well then everybody should. I hope everybody's getting this down, by the way, to see how you can come up with a game plan using price action and harmonics. We get a close below 39.27. What am I favoring? I will be favoring the bigger pullback. We'll take a look at that if we start getting the close below 39.27. You see where the 75 level is? 38.98. You have a low there, 3900. Low here, and harmonic. So that's one on any, if we have any big rollover play, that's the first major key area to watch if you break through this 39.27. There. But this could be an A B, and then a C push higher. Even if the lows on Friday are taken out, we could still be putting in. Now, if we come back to this, the bigger retracement down here between about 38.50 to 38.80, it wouldn't be an ABC, but we'd have a potential would that work? Would we have a potential double? Let's just see. No, it would have to pull up shy of that. So we'll take a look at that if it happens. NASDAQ. So far, as I covered, sideways correction. If we push up again above 12,981 once the Sunday session opens, whether Asia or Europe or even early tomorrow, this potential double, which is never confirmed or triggered, will be off the table. That's the only bearish thing I'm watching for, but that would need a close on at least a 4-hour basis below 12,678. Other than that, sideways correction with 8 pushing the price. We've so far rolling over still on daily. By the way, weekly cycles, which I didn't cover on the S&P, but there's virtually the same, are pushing up still, and weekly trumps daily. Remember that. So we still on the bigger term, even if we go choppy to slightly down on the daily, we still favor an upwards push for the time being. Now, if we get the close above this 12,925, 930 area, I'll be watching for a retest about 13,000 to 13,100. We break above that, 13,246, 13,380 to 14,400. Again, unless this double triggers any pullback, very strong support 12,700. 12,700. The Dow, as I talked about, major dip buying. The area I'm watching, if we do pull down, is between 32,070 and about 31,945. We'd have to start getting some key closes, especially a daily close below 32,148 before I really start focusing back to 31,650. Other than that, on any rally, my key area is 32,760 to 32,800. At this point, I'm raising to the stronger harmonic area. We get above 32,760. That would take us possibly 32,850 is the 200, which is an area. But then I'm watching 32,986, so close to 33,000. And the next major area would be 33,161 area with declining 50 and the harmonic projection. Same story. Cycles trying to turn up on the Dow, but daily cycle still at the top and rolling over. So mixed messages on the Dow. The Russell, the bounce back play from Friday, until the Russell gets above 1797 to 1800. It's still, any rallies are just very bearish rallies. Now, the area I'm watching is, of course, Friday's high. We get above Friday's high. I'm focusing on 1763 and then 1785. And yes, if you need it, if you're a Russell futures trader, or, use these key harmonics. So above 1755, the next one would be 1768 and 1781. There. Are we done yet? The VIX, still no fear. Big reversal on Friday. The DAXI is just caught in this. Remember, this mess has been volatile. A pullback level I'm watching for European. If we do drop down below Friday's low, up 14,885 is key. And then 14,755. I'm still, cycles are turning over, but I can't get overly bearish until we really break below the Monday to 20th lows. Okay, and then we're into more of an advanced clear path, and we have 14,480 and about 14,350 are the next targets, with a major target area being 14,155 and then 13,950 on a major DAX breakdown. There is no other fantastic bullish pattern yet, but we start getting a key like a 1 hour close or a 4 hour close above 15,300. I'll be watching for the high of the retest area. As I talked about before, notes have a potential double top, but a long way off from triggering. We did not get the triggering on the major double bottom, and that really has to trigger on a weekly basis before I'd consider it for a trade. We bounced off the 50, and there would be plenty of time. If this triggers on the weekly, from my perspective, there'd be plenty of time to get in. So the only thing I'm watching, again, if we start breaking down below about 115, then I'm going to be focused on about 114.04 and then potentially the double trigger. There is some major resistance up above 116.11. Yield is trying to really bottom, and we have a potential double bottom in the yield. Also on the yield, if it starts breaking above Friday's high and then closes above there, it would be a % B buy, but into the rotation zone, so it would be very tight with risk management. The 10-2s yield curve, that was pretty toppy on Friday, so I'm watching for the pullback into the rotation zone. Dollar index bouncing to the rotation zone. If we get above Friday's high, I'm watching for follow through 103.20, then about 103.40. Other than that, there's not a super strong bottoming pattern yet. Crude, again, unless it starts closing back above about 70, 90 to 71, not interested in looking at anything to the bullish side with cycles at the top on the daily. So that's more sitting on the hands. Gold still has a potential double top, so nothing's really changed with that. If we start breaking below Thursday's low, we have a gap fill potentially back down to 1949.6. So that could potentially be a front run for the double. Remember, this is a lower probability double since it's against the daily rotation zone. Silver watching at the top, spiked with cycles, watching for a pullback play. The key support area now is about 22.68. Copper is just still a mess, so there's nothing going on there. The yen watching for a potential bounce play on a trade or a break above Friday's high. Not a trade, it would only be a potential trade with then a follow through close. But the area of target would be first the bottom of the rotation zone, 132, and then closer to about 133 to 133.20. So it'd be tight on reward to risk. Euro holding key support on Friday. So unless we start closing below about 107.40, it's still holding the support. But we have daily cycles at the top coming off of oversold, but there's not a fantastic setup going into the beginning of the week. Pound still moving sideways. Unless we start closing below about 121.80, then I'll watch for the slightly bigger pullback. But the currencies are sort of a mix right now. Bitcoin, so far sideways with a rising rotation zone, but we start closing below. Something's bugging me with Bitcoin something's just not right from the trading action. So I am prepared, but we don't have the topping pattern yet. I'd start needing a breakdown below 27K. Other than that, if it does break to the upside, we'd be going 29K and then a potential breakout to the upside. Tesla. If we break below Friday's lows, watching for the gap fill to 183.25. Other than that, there's not a fantastic long-term shorting pattern just yet. On a rotation up, especially if the market strengthened, first target's 197.85, and then we're looking to about 204.10 to 205.25 is the next key level. What else do we have here? Daniel wants MPW. Medical Properties Trust. That's ugly. Ooh. But looks like from the weekly, though, cycle's still at the top, but this is getting overdone. Divergence on the weekly. Wow. Let me just see here. Oh, that is an ugly chart unless you're trying to bottom fish. Wow. Wow. I don't even recall ever looking at this stock. Don't know any real. Oh, it's a REIT. Is this So let's do our setups. I mean, before I get really, besides anything short-term scalpy, you'd have to start getting above about $8. Above $8, you have a gap left behind to about 852, and then I'd be targeting 882 into the rotation zone. But you don't have a strong long-term bottoming pattern yet. And you're against nothing. So I would not be surprised to see this bounce. Okay, but your bounces have been pretty weak so far. So if I was trying to trade this, and without going down and way down in time frames, you don't even have anything on the 1 hour. If you're looking for something, follow through, 1765 would be an area I'd be watching for follow through. Longer term, up in this daily rotation zone, even if it filled this gap to 850, I'd be watching for another rollover play. I'd have to do more fundamental research just to see, because it is trading at a 483 P to E. It's paying a decent dividend. Don't know if that will get slashed or not. That is the risk once it starts getting this beat up. So if you're trying to rotate this into a dividend play, fine. But you just had the X date come out. So at this point, I'd be watching for a longer term, more stable bottom. Because this can definitely bounce, but we don't have a longer term bottom, and you generally don't get V-shaped bottoms like in this kind of stuff. So I'd manage your risk tightly with this one. Hey, Nas Industry. All right. So that's where we stand. Just to look at a couple other things. Again, Apple, we got the potential of 8 pushing the price. If we really start breaking above about this 162 area, I'm watching 163.43 would be a great area to raise a stop from my perspective. You have a gap fill that's still left behind. And then the next key target area is just in front of the breakdown zone, about 165.83 to about 166.72. So I am watching. We have cycles still rolling over, and this doesn't have to happen tomorrow. We could still move sideways or slightly pull back. But unless it starts closing back below the daily rotation zone, I will be watching, even on a slight pullback, for a break. That's one that's on my radar screen for a break to the upside with Apple. Microsoft still has a potential double, but that's the only thing I'm watching for the bearish side. Other than that, if things start rallying this week, keep an eye that if Microsoft breaks up, you have a key magnet at 286.40. And anywhere up to about 298.50 is a potential rollover zone. So this could come up to a prior major topping area last August, and we'd watch more substantially for a rollover, but there is some price magnets up there. Yeah, I completely agree, Daniel. And again, there's a bounce, but a bounce doesn't have to turn into a long-term bottom. Don't mix up time frames. That's what I'm trying to get through to people. A bounce, you get bounces all the time that, don't have to manifest into a larger time frame. EEM and FXI. EEM. This is a fun one to trade at times. EEM, so far, here's what I'm looking. I mean, it's bounced, and there could still be pretty, cycles are at the top, so you got to be careful in the short term. On the weekly, cycles are at the top. Would I be rushing into this emerging markets at this point? No. From the bottom, as long as you don't get the close below about 36.88 on a daily basis, I'd be watching for cycles to pull back down and for a better bottoming thing. If you close below 36.88, I'd be targeting the bigger pullbacks. 35.75. Again, this gaps around a lot, but below that you have 34.62. So I'd be watching for pullback targets if it closes below 36.88. Now, if we come back down here, it holds. You could get a potential double. You could get a pullback. And then if it holds and then breaks, especially if cycles reset, this is why I'm cautious at this point. If cycles reset and then you get a break above about 39.20. Let's see where that looks like with what other levels we'd want to focus on. Well, between 39.72 and 40.42 would be the rollover zone. You get a close, so you'd be targeting. Those would be the areas I'd be targeting with more aggressive stop raising. And look, the 50s at this prior, you had a support becoming resistance, so you start getting close above there. I definitely use that as a trailing stop basis. And then above 40.42, you get a daily close above there. I'd start shifting to watching for some higher harmonics. So that's how I'd structure a game plan in that. And then FXI. I mean, your key right off the 50. Sure, use these levels. Use these levels. Right now, again, cycles at the top. A lot of this foreign stuff is cycles at the top, by the way, even if we're not covering everything here. You're against the weekly 200 here. I'd be watching for at least a short, or is that's the daily, sorry. Sorry, messed up the time frame. Ignore that last statement. Let's see. On any pullback, I'd be watching for 27 to hold as key support. You start closing below that. You can make a quick trip to 25.56, a daily close below 25.56, and then I'd really be in pullback mode. I'd start being cautious, though, if you get that close back below 27. That's a pretty key support area. What I'd need, besides flipping these around, let's just see how that sits in with the nothing. Yeah, that's done. It's too. All right, really, as you start getting above 29.63. This is where again I'd be dailies at the weeklies at the bottom. Key target's about $30. First key target 30.18. That's very key. Above that, so besides a short-term breakout play, above about 30, if it can roll above 29.70 and then sustain a close above 30.18, I'd start getting minorly bullish, but need a follow-through close above 31, and then I'd get more aggressively bullish. I'm glad, Richard. And then, that's why I'm looking at harmonics, because a lot of this stuff is pulled back. At least we can come up with a game plan. That doesn't mean there can't be shorter term trades. I'm trying to give the macro perspective. You can go down in time frames. Like this is a sloppy inverse head and shoulders. You see, so let's say I'm just giving an example. It's sort of a flat. It's not exact, but this thing gaps around a little. I'm just showing you something that did happen. So let's say you were already looking for something bullish and then you got above here. And here's how using shorter term levels, and then you can potentially, I like to come up with the higher levels so you can roll it in. So looking at the shorter term stuff. So we had the inverse head and shoulders. All right. I'm just going to anchor it to right here because it'll give us a really good idea with the, this already hit all, I can tell you it already hit all the inverse head and shoulders targets. But then, if you're trying to play this, all right, didn't quite hit the first target, but then you gap above, and we got this. Don't use a down close for something to confirm long above the 62.5. Wait for the up close. So now it's got the up close. So now I'd still be watching for this 29.34 to 29.68 if you were working on a follow-through play. And then you're going to come up to the 30.20 area, which is there's some price action support here that broke down and retested. So that would be another key area. So you start getting above this 29.70 area, 30.18. And this is how you can structure rolling a shorter term thing into a longer term if you are longer term bullish. And then you can use the trailing method to trail out. I love to trail out because that way, at least with partials. Because if you trail out with partials, you don't have to sit and worry, oh, did I miss something? Did I do this? Did I do that? No. Especially at major targets. Like, let's say this would be a major target area for me between the 50 and the 62.5. So definitely I'd be looking to unwind something. And then if it were to continue, trail out. Well, in my case, it's madness in the method. So there, you got a little, that's a way you can use some of these simple tools. Now, be a little careful with FXI. Here's the bigger gotcha. Let's just now take, because you want to do all your analysis. What is this on the weekly basis? You know, you got a head and shoulders here. So, you get a weekly close below this like 27 area. Would I be looking at the long side at all anymore? No. So now I have a finite, a major stop area. A major stop area. And that's even in front of, if we go back and put on the weekly harmonics, that's even in front of this 62.5. So we start triggering this. Yeah, this could be, you know, if you were shortened, could be definitely a stop lower perspective, because that you're going to need to get a key close for the follow through below that. But you have the probability shifts to downside. So as long as you don't, and this is a weekly chart, so you need a weekly close. However, you start breaking down below these lows from mid-March, especially if you get intraday momentum or you get a gap down on a daily below there. So now you can structure your game plan using this stuff. All right, really first time look at charts to plan ahead to such detail. And that's where you get to use some charting stuff, and it helps you come up with a game plan so you're not just flying blind. And then you can use other things. You can use the rotation zones. You can use key support resistance. You can use some of the other target moving averages. But I like to work out a rough roadmap. So I have a roadmap going into stuff so I'm not caught off guard. And then I can start structuring trades and managing my risk and reward. Remember, manage risk first, because rewards can take care of themselves. If you're always managing risk, you're in a better position. Hey, Daniel, thank you for the super sticker. Thank you very much. That is appreciated. Thank you. Random question based on my background. Curious, what does a full-time trader for one of the big firms typically earn per year? Oh boy, a good one with bonus can easily be in the low seven figures. Easily getting into the seven figures. If you are good. So that's where we sit. So I wanted to do a little teaching today to try to help people, and thanks to you for bringing up these stocks, to try to help people understand using just some simple stuff, how you can start formulating a game plan, and you can always fine tune it from there using more information. But just structuring some kind of plan with write down some key levels, mark them off in the charts, and then you can work on fine tuning them. But a plan will leave you more prepared than no plan. And I don't know how people, unless they have a lot of experience with their trading, and they know roughly based off this setup, here's my generic win percentage, here's my generic reward to risk percentage. I don't know how people, without outlining a plan and coming up with key levels, because key levels can be used to take profits, key levels can be used for stops, key levels can be used, okay, I have key targets and I have key stops. Now I can manage my reward to risk and know where I sit. Without those, what are you doing? You're just flying blind. And flying blind, you know, in a bull market, you can easily fly blind. You know, don't mix up a bull market for brains, is the old adage. Don't mix it up, because a rising tide lifts all boats. You know, when the tide's rising, you don't have to be a rocket scientist for your boat to rise. It still helps you. I still say have stops and targets on bull markets, but if you're trying to play a bear market and you're not managing risk and you can't come up with a reward to risk ratio, and you're always taking profits early and letting losses run, you're doomed long time. You're doomed until the next bull run when you think you're a super genius. And whether you're trading stocks or futures or whatever, the rules are the rules. They apply to everything, or FX or the cryptos. Follow a set of rules. Unless you only think stocks go up. And if you only think stocks go up, then don't worry about it. Now, long-term stocks do go up. Long-term, but stocks can stay not going up for a long time too. Let's get those likes up. Take a second and yeah, could you please? Thank you, Andrew. And again, thank you everybody for being here on a Sunday afternoon. I know people have a lot better things to do probably, but I think learning and prepping for the market can be something that will last you a very long time. And to go into a market blind for the week is not, and trying to cram at the last minute is not healthy from my perspective. Scratch do. Really helpful. Where do is a support page? Where I'm confused, Richard. Oh, where is a support page? What do you mean, where's the support page? I guess I'm the support page. So, with that, everyone have a fantastic rest of your Sunday. I will be back at it tomorrow morning, and I will see everyone then. Enjoy the rest of your weekend. Bye for now.